Gold sharply lower Tuesday morning. We're going to talk to Peter Hugg on this edition of For Pete's Sake to find out why, coming up. And joining me now is Peter Hugg. Pete, thanks for being with me today.
You're welcome, Alec.
Now, Peter, we'll give credit where credit's due. In late February, you mentioned that the severe weather, the heavy winter that we were getting, it would have an impact on economic data. Now, can you weigh how much of an impact that had on markets?
I don't know how much the weather had an impact on the economic data. I certainly believed and indicated back in February that the severe winter that was experienced in the northeastern part of the United States, the worst in 20 years, certainly would have an impact on economic performance in the first quarter, which I think it did. Now we're coming into spring, and I think consumer confidence levels are elevated. Retail sales numbers that came out for March were the highest since September of 2012. And there's a lot of people that just didn't get out in the winter and had pent-up demand, and I think that's starting to show itself and should help the economy going forward.
Now, Peter, like you mentioned, the U.S. retail sales were higher. Gold this morning was sharply down. This is before CPI inflation came out. Now, what kind of impact did retail sales and maybe CPI after the fact have on gold prices?
Well, I think the selling before the CPI numbers came out was a result of the retail sales numbers that came out yesterday. There was some noise, I almost call it blabber, in the markets over the past couple of weeks that the Fed was really concerned and that they may stop their tapering program. And I didn't see that. I didn't get that feeling from the Fed minutes, nor did I get it from Yellen's comments. So the retail sales figures for March indicate to me that the Fed is going to stay on its tapering course. The economy is healing, albeit slowly, and that type of scenario would indicate flows into the U.S. dollar, because I do believe the U.S. economy is well ahead of the curve of the European recovery, where they're still worried about deflation. So I think that was the impact that caused gold to sell off, notwithstanding the issues in the Ukraine. It overcame those issues. But this morning's CPI number, the inflation numbers are a little higher than expected, which again would reinforce Yellen and the Fed tapering. But at the same time, once inflation starts to take hold, it can get nasty very quickly. I think we're premature on an inflation scare, but it was enough to hold gold at its 200-day moving average, where we suggested we'd find support this morning around the 1295 area. And we find ourselves, as we're doing this interview, at around 1300.
All right, Peter, we'll get back to Ukraine, Russia in a moment. Now, I want to touch on Janet Yellen and Beige Book. Is this still a big thing that we should look for, that the market's going to look towards?
Well, I think the Beige Book is a significant indicator. But again, these numbers, I do not believe the Fed is going to change course here on one number. I think they've got a plan. I think they want to get rid of the bond buying, ideally by the end of summer. They're very cognizant, however, on the equity market as well. They're watching the values there. Right now, it looks like a rotation in the equity market. It doesn't look like an outright selling binge. So they're watching that carefully. So a serious drop in the equity market may be the catalyst that, in my opinion, could change the Fed's mind. But it would take that. Apart from a major meltdown in the equity market, I think the Fed holds course, and the bond buying ends by late summer.
All right, Peter, back to the Ukraine and Russian situation. Now, the geopolitical tensions that are going on in Eastern Europe, you said off camera that it seems to be providing some sort of support for gold right now. If not for what was going on, gold would be lower than it currently is. When this situation resolves itself, what happens to gold? Well, again, it depends.
It really depends on how the situation mitigates itself in the Ukraine. An all-out civil war in the Ukraine, other than the damage or the repercussions to the populace in the Ukraine, could have some serious consequences to Europe from the perspective of the natural gas flows. There's a number of things that could still happen. And within the context of those number of things that could still happen, that creates some support for gold as a safe haven, alternative investment play, specifically for the Europeans that are much, much more sensitive.
All right, Peter, let's wrap up with this week being a short trading week. Obviously, Good Friday is coming up. Now, do you see trade volumes maybe winding down towards the end of Wednesday, maybe early Thursday?
I certainly do. I think Easter is a significant holiday, especially for the Europeans. I think the books are being squared as we speak, and I would suspect that the European theater will be pretty much done by noon Thursday, going into long weekend. I think traders are trying to figure out how to position themselves into this long weekend. You can't be short because of the potential issues in the Ukraine, and you cannot be aggressively long in the anticipation of dollar strength. So I think this market is going to square, and we've probably seen the levels. If you needed a level between now and Monday, I would suggest 1290 to maybe 1315 would be an adequate level that'll hold, until we come back in next Monday, and then the trend will reassert itself.
All right, Peter, thanks for joining me today. Great insights. Enjoy the long weekend.
Thank you. Same to you.
And thank you for watching this edition of For Pete's Sake. If you have any comments or questions, don't hesitate to send them to newsfeedback@kitco.com. Thanks for watching.